Hi all, today we're going to talk about Tesla. Its shares had a pullback recently because of a bunch of things, the market condition, all of the news, and most notably because of their earnings, which were pretty disappointing. So the Tesla shares went in the last couple of months from $180 to $260, and now they pulled back into kind of 200 territory, depends on when you're watching this video. So we thought we might take a look at the Tesla share to kind of identify maybe it's a good point to invest in the stock. So recent earnings were kind of disappointing. The company missed its earnings per share expectation, and it's actually missed them for fourth quarter in a row. So something is happening with the company because let's face it, Tesla is a great company, or was a great company. If we're comparing Tesla pre-COVID to what it is right now, Tesla's stock share price was around $14 then. It's 200 and was much more than 200 in the recent period. Its sales grew quarterly from around 5 billion to around 25 billion right now. So the company is good. The company is great. What is going on with kind of the flat lines that we are seeing in the past 2 years? And to answer this, we have to take a look at the breakdown of Tesla sales. What is it selling and how it's breaking down by the dollar value. And when we take a look at this, we can see that 80% of Tesla sales is still from cars. So Tesla essentially is a car company. I know that many of you can say that, hey, in recent quarter, energy generation and storage actually grew nicely. Still, 80% of the sales is coming from cars. And many of you thinking that Tesla is maybe a tech company with kind of tech company growth and opportunities, but it's not really. If we take a look at Tesla's infrastructure and all of their kind of innovative products, which we're talking about robotaxis and Cybertruck and Semi and Roadster, all of them are car related in one way or another. If you find this information valuable and you would like to hear more from us, like this video and subscribe to our channel. So let's take a look at the car sector as a whole to understand what's going on there. So after a robust 2021 and 2022 where car sales and car parts were growing pretty nicely by 15, 20, even more percent per year, we have seen a decline in the last 2 years. A decline that actually culminates right about now, where car sales are down 5% year over year compared to 2023. Tesla, as a car company, as a part of this sector, is facing a lot more competition than it did a couple of years ago. Because think about it, if we have a sector, in this sector we have a bunch of companies, and the sector starts to shrink, the competition starts to increase. And when the competition increases, the profit margin are actually decreasing. And this is what we've seen with Tesla. Its total gross margins went from mid-20s to around mid-10s right now. So right now the company needs to sell much more vehicles or much more parts just to meet the same expectation, the same quarterly sales expectation that it did a couple of years ago, basically with the same dollar value. Tesla's total gross profit actually bounced back in Q2, but it's still less than it was a year ago. It less by around $1 billion. So we still have quite a gap there. And a combination of sector shrinking and the competition increasing caused that Tesla share in overall EV market has been declining over past couple of years. Right now it's still above 50%, it's around 50% right now, but it is dropping. When we're talking about Tesla and when we're talking about how the market values the company and how the company is comparing to kind of other companies in the same sector, here's a nice exercise for you. Take Tesla, take it out of the overall car sector and take 15 biggest automotive companies by market share, publicly traded ones, of course. So 15 biggest companies by market share combined comprise about $1 trillion in market cap. Tesla alone right now is around $660 billion. So Tesla alone is about 2/3 of the overall market share of 15 biggest companies in auto sector. I don't know about you, but this valuation actually puts me at unease about investing in Tesla because it seems like the market is expecting from Tesla a lot. Market is expecting from Tesla to grow the same way it growed in 2020, 2021, but it cannot because the kind of overall market conditions are just not right for the company right now. And on the same topic of market expectation, I'm actually struggling to think about other company which has been so optimistically overvalued or was expected so much from by the analyst. This is at the point where it's getting a little bit ridiculous. If we take a look at the forward earnings for 2024 right now for Tesla, we are talking about expectation of $2.34 per share or revenue at around $100 billion. If we take a look at the same earnings expectation, but on February 2023, so basically in February 2023, what the analysts were expecting the 24 earnings would be. The expectation would be for Tesla to have an earnings of $5.56 compared to $2.34 right now, and the revenue expectation was about $134 billion. So in 18 months, the expectation from the company regarding earnings dropped by about 60% and the revenue dropped by about 25%. So there is a lot of hype and a lot of expectation of how the company numbers should be, but it's not what's happening. And when you're looking at kind of forward expectation from the analysts, take it with a pinch of salt because analysts are kind of overestimating what Tesla will do and what Tesla actually does. Now, it's not all bad news for Tesla. The EV market right now is actually growing, and in US it grows by more than 10% year over year. Again, as I said, the car market is actually shrinking. The EV market is growing, which says that EVs are actually taking more and more of the overall car market, which is kind of good news for Tesla, I would assume. The other good news is energy generation and storage. We have talked about them being kind of small part of Tesla sales, but this part grows over time. And why it's a good news? Because their gross margin are actually bigger than the gross margin of car sales. So this can be a potential kind of profit maker for Tesla over the next upcoming years. Now, despite all of this, there are still a lot of risks related to Tesla. I've talked about Tesla being over optimistically estimated by analysts. If we take a look at what analysts predict for the next, for example, 10 years, the estimations are pretty ridiculous. Now, if we look at 2029 numbers, even if Tesla still manages to triple its earnings right now in 2029, it still will be trading for 22 times these levels. I don't know, it seems like a little bit too much. Tesla's market cap is already $600 billion. It's already 2/3 of 15 biggest companies, car companies, which are trading right now. I do not feel convinced adding Tesla with this valuation to my portfolio. And this is on top of Tesla being the company which free cash flow went from around $9 billion a couple of years ago to about $2 billion right now. So in order for Tesla to grow and in order for Tesla to achieve these numbers, it needs to invest a lot of money in kind of future products. Take these robotaxis, for example. This will be something which will require a lot of money. If Tesla's free cash flow is $2 billion, where is that money gonna come from? And I'm not convinced that the company can take its current line of products and grow it by the numbers which analysts are expected Tesla to grow. The other risk I'm worried about right now is Tesla being a part of car sector and the part of kind of US consumption. These two things can take a hit. You probably saw the news. Maybe we are right now in the middle of the recession. Maybe the unemployment will hit. All of this are very much on the table. All of this very much on the news. And there is no doubt that if we are going to go into a recession, if the inflation will spike, if the unemployment will spike, EV market will take a hit and the demand will drop. And the question is, if the demand drops, probably Tesla is going to drop with it together. Right now, I'm not really convinced that this is a risk worth taking. Overall market conditions are very volatile right now. The markets are going 3% up, 3% down every single day. And Tesla is more volatile than the market. I'm not convinced it's worth adding this volatility to my portfolio. I would really like to know your opinion. Do you think Tesla will grow as analysts expect it to grow? Do you have Tesla stocks in your portfolio? How do you justify this valuation and this number? I genuinely want to know because I don't have Tesla shares in my portfolio. Maybe you can convince me that it is worth adding. I'm waiting to hear from you in the comments. That's all for now. We'll see you guys in the next video. Please like this video, subscribe, and take care.